We have Mr. Ed Yardeni, the President and Chief Investment Strategist at Yardeni Research, joining us on the show. Hi, Ed. Thank you so much for making time and speaking with us. The CPI data for US has been declining for 11 months on the trot. It came in lower than expectation. Do you think that, entire worry about inflation is behind us and hence a pause is what is likely to happen later tomorrow?
It seems that since October 12th, any day without bad news is a good day for the market. There's a lot of bad news that was expected that just isn't happening. We're not having a recession. We're not having a credit crunch. We're seeing inflation continue to moderate. And now I think the expectation is that the Federal Reserve will probably skip raising the Fed funds rate at the meeting tomorrow, and that there might be another increase in July. But I think the Fed is done. The Fed wanted to get restrictive. We're at restrictive. They're going to keep it there, and that will be high enough to bring inflation down without an economy-wide recession.
Is it too early to assume that the Fed actually has won the war against inflation?
Well, it hasn't won the war against inflation. The Fed has made it very clear, really, over the past year, that their intention is to get the Fed funds rate up to a restrictive enough level that they could keep it there, and that over time, that would bring inflation down. They're aiming to get the inflation target down to 2% by 2025, so they're not rushing it. They're not saying we've got to get there six to 12 months from now. If the goal was to get down to 2% in 6 to 12 months, then we have to raise interest rates a lot more. We have to have a recession, and that would be terrible for the stock market. I think the Federal Reserve has made it clear that they want to be more gradual about it. They don't want to destroy all the progress that's been made in getting people employed. And so I don't think they're going to declare victory on inflation. They're going to say that they've gotten to where they want to be with the Fed funds rate, and they're going to keep it there. Remember, the markets have been anticipating a drop in interest rates, and I think increasingly the Fed has succeeded in convincing the markets that interest rates are going to stay high.
Ed, great to have you on the show with that quick take on what to make of the inflation print and, of course, what to expect from the Fed tonight.